name is Remco. I'm from Atos. I'm part of this company for around 20 years. And currently in the board for financial services in the role as Chief Digital Officer. And within that I manage a team of industry directors that are mainly focusing on vertical go-to-market. So that can be, for instance, around open banking, customer experience, but also loan utility. And we run the FinTech engagement program, which is around onboarding FinTechs, working and partnering with FinTechs for both banks and insurers. So I hope to moderate the discussion today. I think it's also a good, I will do the intro, of course. The people on the panel you already know, so we're not going to do a round of introduction, but I think it's good to come back a little bit on the discussion of today as a whole. And I'm also very open to questions from the audience to make it a little bit of interaction, because that's also the recap of the day, of course. So, coming back to the discussion, so we have seen, and sorry, I was stepping in last minute, so I have some notes here. Whether FinTech is a hive and just a matter of innovation, or is it, or will banking remain the same? And within that, and you have also read that in the invitation, we could look at various scenarios on banking, right? So we have the scenario which is around the neobanks, where we have some examples seen today. We have also seen on the existing banks, the incumbents, and also how they fight back. And we saw the picture of the tsunami today, and there were various scenarios here. And of course, beyond that, we also have maybe what I call the combined scenario, which is more focused on a distributed banking system, or an ecosystem of banks, right? More becoming a platform. And lastly, the utility, and frequently that the scenario is pushed away because nobody wants to become a dump pipe, as it was said. So maybe, and having said all these alternative scenarios, we might see that it will become a potential situation of consolidation also in a few years. Like, will FinTech still be there after 5 years? And or will banks start acquiring FinTechs, and then in the end it will be all the same, right? So given these situations, let's start a little bit with, for instance, Leon, what is your view where it will go?
Yeah, no, definitely. I think you were laughing at the words fighting back. We strongly believe it's a collaboration effort, and I think what Erste is showing is not fighting back, but it's collaborating. And that's also what we at Yolt strongly believe. So not only because, you know, consuming the APIs, the open banking PSD2 APIs, that's not collaborating, that's just kind of, you know, taking data with the consent of a consumer, obviously. But I think beyond just that data, there's a lot of room for collaboration. And the banks have great products, and they're really good at building those products. So can I build a better mortgage product? Probably not. But can a bank build a PFM solution or a money app as good as we can in the time we did? Maybe not. So is there room for collaboration? Yes. So I think it's really on the collaboration front where it will be going. So different models will exist. There's even banks that are calling themselves Rails Bank. You know, Nigel was here today, so they actually want to be the Rails. And so different models will exist. Some convergence will also take place, so a lot will pop up. There will be convergence, but I think collaboration is the way forward.
Okay. Now you have to wait a little bit. So Hatim, what is your view on this?
I think banking have been very profitable for a long time. So it's a logical step that a lot of people are coming in. They want to see the money, and they want to earn a bit of the money. So I think it's a good thing. Competition helps getting new ideas and new developments. Yeah. So that will continue. But banks will, they will fight back because the money is good, and a lot of there are 10,000 of banks in Europe still making a lot of money. So they're not going to give that part to FinTechs. So, and is that bad? No, I think if you keep the needs of clients in mind, it's a good thing.
And Birte, what is your view from, of course, the incumbent bank?
Well, I was laughing at fighting back because, actually, I don't even see the need to fight back. I think we should all fight every day to bring better services and better products to our clients. And we are happy to collaborate with whoever is helping us with that, making the client experience in the end better. That can be a fintech, that can be another vendor, that can be another partner somewhere else. And I think every bank has to decide for their own, what is a real USP. For us, it's probably not even the product. Actually, products are probably the least important part for me personally of the whole business model. For us, it's always a relationship to the client. That's what we want to keep. That's what we think is very important. That what we think we are good at building and keeping that relationship, and everything that helps us keeping that, building on that, and obviously monetizing that. Because yeah, sure, we are a stock listed company, and in the end, we need to be profitable to stay stock listed, but also to be able to give something back is good.
There you go. And maybe a little bit on, because you both run fintechs, so how do you grow your customer base? Because incumbents have large customer base, and of course it's all about building the business, not just the application or the service, etc. But how do you attract the customers to your platform in order to have that sustainable business model for your companies, right? So let's see, Leon, how did you do that, and how do you assure your future?
Yeah, no, as I showed, it's being a platform. You need to focus on one side, because if you start focusing on both sides at the same time, you're gonna fail or really be in trouble. So we're trying to focus on the user side now. So obviously, gaining 300,000 users in a year, that's a relatively quick pace of growing. A lot of marketing effort goes into that. A lot of social media marketing, obviously. A nice experience I had personally was being on the tube in London and then seeing your own advert on the tube. Yeah, then you know, okay, this is the company is really out there. So it's a lot of marketing, but also we actually see that around 30 to 40% of our downloads are actually organic. So it's a lot of word of mouth and a lot of people referring the Yolt app to others. And we are still relatively small, because even though 300,000 is a big number, but there are 65 million people in the UK. But seeing that traction, that's really what's, and Hatim was talking about it, that's what's driving us forward. And the reviews we see that we are actually helping people save money for those washing machines, for single moms, telling us that they now know where they're spending their money and they can actually save for their future. That's what drives me on and drives the whole team on to bring it forward. And if you have a great product, people will come and love it and use it.
And Hatim, your view on this, how do you gain your customers? Because in the end, that's an important part of that particular scenario if you're more in a neobank situation.
Yeah, definitely. I think the banks that have millions of clients, they have a trusted position with those clients. And I think for us, yes, of course, you need to have passionate bankers of professionals who really sell the product. You need marketing, you need partnerships with other parties. And I think when you have that, then you will come to a point that a lot of clients will consider you the party of choice for different solutions. So for us, it's FX conversion and international payments. We want clients that first go to us and not have multiple parties doing this business. So you need to be the most easy one, and you need to be integrated in their business, so they understand it's hassle-free and it's the ease of use will be the differentiator factor in this, I think. And when you come to that point, I think then you will be relevant, and that's it's all about the relevancy, I think.
Okay, but so thanks for explaining this, and I think of course this is the right way to go. But we will also see that fintechs will fail, right? So they will not attract the volume, and also they will not be able to build the right partnerships with banks. So that is something where maybe the IP is still an attractive IP, or the software that they have built could be extremely innovative, but they just didn't make it in terms of the building the growth numbers that they had, or they didn't get enough funding, continue to get the funding, right? So getting this view is an interesting one, but let's elaborate a little bit further, because of course we have these scenarios that we outlined. What could be typically very other scenarios than this? If we would be doing a little bit more brainstorming, what should be happening for the future, where we say, okay, we have neobanks, we have the distributed model or the utility. What should really step change in order to get something that is really new, right? Because in the end we're doing banking, but what would change for me? For me, in my case, as a point of a consumer, I want to be guided from morning to evening, from cradle to grave. But what does that imply really to change the market? And what is the real scenario that we should really focus on? What should we really do differently? Yeah? For you?
Let me say one thing in advance. You started the question is, what is the scenario that we see most likely, and have we touched upon all of that? Well, I actually missed one big thing, a very big thing in the whole discussion today, that is big tech. Not GAFA, but FatBack by now, so including the Chinese tech companies. I think that I also, as a bank, deeply believe that is going to be a game changer. At the moment, most of them run around and say, we're not going to be a bank, we're not going to be a bank, we just want to have the relationship with the customer. Well, still. I do believe that is a game changer. I do believe no one has the exact answer today on how that is going to look like. Obviously, also, there will be a lot of collaboration models. I mean, Amazon is starting to partner with banks at the moment. The payment schemes are coming anyhow. But I'm absolutely sure that it's the next big game changer that will really change financial services deeply.
Yeah, so obviously the influence of Chinese platforms that are upcoming both on banking and insurance side. So WeChat was shown on the Money 2020 big time, and it's amazing what kind of volume they picked up in payments about this particular voucher. I don't remember the name. On the other side, we were on a couple of weeks ago on the DIA event, which is Digital Insurance Agenda, where they presented one of the larger startup insurance companies funded by Tencent, Alibaba, is it? And the other one is Ping An. And it was just amazing. They built a complete new platform from scratch and onboarded hundreds of millions of customers. And the amount of policies coming to being sold on a day is just mind-blowing. And it's crystal clear that these guys will come to Europe. Yeah, of course, they are not yet savvy on the regulation, but it will happen. It will influence. I agree. So this is one plausible scenario. Are there any other potential scenarios that you could think of?
I think if fintech companies have built something that really has value, you always can change your business model. Because if you look at investors look at the value that they see in front of them. And if you can't monetize it by having the client relationship, you also can look at a different revenue model. But if you come to the point that you see, okay, my forecast is not the same as my actuals, you need to look at what did I build? Did I build value? And I think the companies that really build value and have a good product, and it's tested properly and it works for a lot of clients, that always has value. And then you can look at corporations, because if it's with a bank or with a tech company or a different partner model, it's difficult in this global society where you have competition with people, with companies with such a big backyard, to be good in everything. But you need to be good in one thing, because if you're not, then then Darwin comes in again.
Leon?
No, I agree. It's basically, for example, I showed the example that we could offer our users the ability to book a hotel room through the Yolt platform. Am I ever going to build a better booking.com? No. So can I partner with them? Yes. And I think that's the constantly decision Hatim is saying that you need to make. What's the core proposition that I have built, that it brings value to my users, and then add on whatever good features are out there for them, and not making it yourself, because then in the end you will fail miserably.
Just to point or zoom in on it, because this is also where I would like to head a little bit, because this is more cross-market thinking, right? Fintechs serving to banks, or fintechs being a neobank. But cross-market thinking, like serving a retailer, serving a telco, where also loads of data is available, and we actually have the interaction. Think of Uber that embedded the payment systems in a taxi service. So there's much more of that to be thought of, and Another angle of looking at it, what I see frequently with banks, but also with insurance, where do they actually start the customer journey? And frequently this is actually from their perspective, but the customer journey from the customer's perspective starts much earlier, right? It's about ideation, what do I want to do? And you were mentioning it, Birte, earlier about some simulations, for instance, about live events, etc. That it's pretty much in the direction of where you need to go if you want to be guided into your consumer life and get real decision power to be in the driver's seat of your financial situation, right? So can we build on that a little bit more, on cross-market thinking? What could we do potentially?
Yeah. Let me start with that onboarding or customer origination part. I'm fully with you. In the past, I think most banks and insurance companies started thinking of someone as a customer the moment you go through all that KYC process, which is a nightmare, as we all know. And yes, it's digitally starting to be a little bit easier. Also that, by the way, video legitimation in 1 out of 7 markets possible at the moment. So it takes time to get there also with the regulation. And EU single digital market, forget it. I think that is changing. I mean, we are looking deeply and starting to work on how can we engage people digitally a lot earlier before they really become a customer in the KYC sense of way. We are also thinking and discussing how to expand the ecosystem into non-financial services. But there's 2 things. On one hand, there is still so much stuff to build in the backlog that is a lot closer to our original business that we use, that we tend to prioritize that actually, very simply. And on the other hand, that's also a question on how far does that extend and where does it stop? And how do customers on the long run react on it? And I deeply believe there will be a percentage, a segment of customers that will love having all of that fully integrated. And there will also probably be a segment of customers that are looking at China at the moment and think 5,000 data points on me, real time, any given moment in the Ali Imperium. Do I really want that? So I think that will, in my personal expression, really, that will spread up a lot. You will have people that want to have everything integrated. You will have people that love to have their payments disappear in their car paying while leaving the gas station. And you will have others that say, guys, I need that control. And I need to really be able to see the boundaries of what I'm doing there.
Any other views?
Maybe from the audience.
Yeah.
Hatim was trying to bring them in.
Yeah, I agree. So let's open up.
In the week that's in it, with Amsterdam hosting the FinTech Week, and in 4 months in Sydney, Australia, there'll be the 40th year of SIBOS, which is organized by the incumbents called SWIFT. And I don't say the word because they're actually quite slow. Can this panel discuss how we can transact more faster without the incumbent? How much of a dinosaur is SWIFT?
It's hard to comment on that. I mean, probably you've been dealing with it, but I would say that there's better technology out there, and if they don't change, then it will be obsolete at some point. So, in the Dutch example, we have Ideal. That's a way of paying directly from your bank account. And actually, I was baffled when I went to the UK and I saw the initial open banking demos of a PIS payment in open banking. I was like, this is ideal. We've had this for 8 years in the Netherlands. But then again, they have 16-digit debit cards that we don't have. So you can purchase online with your debit card. And also, where I'm going to is that Ideal will also go away with PIS coming in, because Ideal will become obsolete if I can do PIS payments from my account directly. So. And as long as Ideal doesn't change, or the banks, don't join forces, or another party steps in, it will be obsolete and new technology will take over. But on a SWIFT specifically, I don't know if you can comment, but there's obviously better options.
Yeah, we need to wait for blockchain, I think. So I think when blockchain, and we have the right blockchain, you don't need correspondent banking, you don't need SWIFT, and it's over. And I think that's one of the parties that will need to adapt, or it will be over. It's the banks. We set up SWIFT because it was the solution for a problem that we had, but now it's becoming the problem, and now other people are building the solution.
but coming back to the scenarios that we're referring to, because I think that's important. So it's important that banks also explore these potential alternative scenarios in order to see what how that can affect the business model. So that is for sure something that's upcoming because of new technology that you need to explore, right?
But I think a lot of banks are I don't know banks that are not experimenting with blockchain. So even a startup as Franx is experimenting with blockchain. So there will be a common understanding, but you need to have the settlement in all the world, and that's I think where the trust also come in, because when you deliver it, it needs to be swift, it needs to be trusted, and I think the track and trace will be important as well. And when those three will come together, I think that we have seen a lot of promising results in certain countries with certain currencies. But when that will expand, I think that will expand very quickly in the upcoming 2 years. Yeah, then we will see what SWIFT will do.
At least currently they are not planning to go into banking themselves. Everything that we hear when we talk to them is that they say too afraid of the legislation and of the liability that comes with it. So yes, my perception or my assumption at the moment is that currently they're looking at partnering. They are also looking at partnering in Europe. At the moment, they are probably spreading and talking and trying to understand the market and looking at it. But sure, that's going to happen. Absolutely, that's perfectly clear. And yes, I would absolutely sign that off. That Amazon is the biggest threat of all of that at the moment. Absolutely.
I think the big tech, the skill of the big tech is scale play. They're very good in scale, and everywhere in the pieces of banking, because banking is very broad, where it's a scale game. Look at the payments, look at Stripe, look at Adyen. They have marginal cost addition, and they can have a huge more amount of transactions. All those games, there are games that are very big tech is very well positioned, I think. And the other parts of banking, where it's relationship, it's the understanding how to deal with lawyers, how to deal with accountants, how to deal. I think a lot of people working for big tech are I'm not sure if there are a lot of lawyers in the room, but I don't think they are looking forward for that part of the business.
Yeah, and also let's not forget that AWS is also Amazon. So AWS is going to power a lot of banking systems, and there's more and more partnerships on that space, and they will move to that space, and then actually AWS, hence Amazon, is actually making banking better and cheaper for the banks. Yeah. So
this is an interesting discussion, because I won't reveal the customer name, but I was talking to a large French bank, and obviously my company partners with Google, and we're also saying around cloud strategy, data centers, private cloud, public cloud, and we were discussing with this particular customer, would this be interesting to work with this customer and with Google, and they were very clear, no, they're a competitor for us, right? So it's an interesting dialogue, and it will trigger a lot of discussion with the Main Street banks. Yeah.
Yeah, plus, they don't need to be a bank. For my view, what's interesting for Google is the transactional information, for example. So that's what they're currently lacking. So they can get the PSD2 APIs, gather the information, and actually have more than they ever had before. I always divide it into 3 blocks. So people search on Google for what they want to buy. Google knows what shop you're going to. The bank only knows what shop you paid at. And then the merchant knows, Amazon again, the merchant knows what you bought. Banks are being obliged to share their data. Google monetized it by having everybody pay for Google AdWords and Google search and whatnot. And bol.com or Amazon is never going to share the data. So it's kind of becoming if they do step into banking, and the question is, then I think it's going to be one street of data owned by Amazon. And maybe they go into search engines as well, and then they pretty much own everything.
That is true.
And
the question is, how will regulators look at it in
the
various
exactly,
countries, right?
and even the ING CEO Ralph Hammers, he said that it's maybe even a mistake by PSD2 or by the European Committee to actually allow those big tech access to that same data, because then they will own all the data. Yeah. Whether you, as a user, because some users will not mind, some users will.
All right.
And actually, just one tiny little example, PSD2 is currently really hitting off in one of our markets, not at all, by the way, in all the others, nothing happening, even though the first banks are open with the APIs. What is happening is big techs, big corporations, and not a single fintech so far. So did we really hit with PSD2 what we wanted to support? I would have a big question mark on that.
Okay, let's take a last question from the audience.
Yeah.
Remco. Right.
So just to give a comment to this discussion, because I love this topic about the threat of the big techs. Right now, in most surveys, they say that about 4 to 10 bankers believe that Amazon will enter retail market in the next 5 years. I mean, that is already given, but most of the big techs are at this moment developing their own PISPs. So if you take that and then also take another fact that they're probably going to take away the biggest market shares that retail banks have right now, what do you think about that? How do you think that incumbent banks will have to shield themselves against the oncoming onslaught of the tech giants? And taking that, people right now trust Amazon more with their money than anyone else, actually in the second place next to traditional banks. Can you give some comments on this?
Yes, I mean, from the standpoint that, and it was referred to in the first question, switching, people don't switch their bank account. So there's not a lot, even though Monzo is doing great in the UK, attracting good numbers, but then 10% of those people are actually using the Monzo bank account as their primary account. So, and banks, you know, Erste has been there for 200 years. So, and there probably have been other big techs 100 years ago that we would have called big tech at that time, IBM or Microsoft, or they're probably more recent. So yes, something will happen, but I don't see the fact that all traffic will move away from banks, and the banks will still own the products, at least. The customer relationship is really dependent on how it happens. So it could be through money platforms, it could be directly through the bank, could be in a collaboration form. But switching pools in any country are around 2 to 3% of customers that switch bank account.
Yeah. Absolutely. I believe it will just spread up more, right? And yes, we will have banks having the relationship. We will have aggregators or platforms having the relationship. All of that will exist. Looking at big techs, actually, I'm not really sure if the current account will be the first thing that really changes. Because in our perception, current account is really something, their primary current account. We just talked about it yesterday, looking at Revolut, where a lot of people still need that trust and want to have that trust and want to be able to go to someone and shout at them if something doesn't work. But actually, if Amazon went into, to not pick a banking example, went into car insurance, if I could pick my new car insurance by one click as I buy basically everything else I buy in my life, that would be amazing. So I'm sure if it's simple products, if it's easy products, there will be a market for that. I'm sure they're going to do that as a platform. Will it be I shift my whole banking relationship to someone as a big tech? There might be a few people, but probably not that many so far. Yeah.
Yeah, and I'm not a pessimist, so it's. I will never think that will happen. So it's all about thinking about the client needs, and the clients also in the future will have needs. They will have dreams. They need money for their dreams, and they need people with financial background that think about how can I make sure that we in that scope that money that people need money and other people have money that they can lend to someone. That's the idea of banking, and I think there we can use a lot of solutions that big tech and fintechs are bringing us to make the life of clients easier.
Okay, thanks. Birte, you actually triggered me with the car insurance and via Amazon. What you also have to consider, and maybe as a concluding note, is that other industries like the car industries is really seriously reinventing themselves. So the lease industry, the car industry, and they will go to different models where we will not no longer buy cars, right? We will take an abonnement or a monthly fee where you can pick whatever car you want for that particular moment, that particular day, and it will lead to completely different business models on well, buying cars. And of course, going back to the journeys that I was referring to, or working cross-market, that's where banks or fintechs need to step in to render these kind of services. And then even within the car, and this, for instance, a service that we provide with Atos Worldline, is also this, the navigation, provide services to guide you to the right retailer, similar to what Google is doing if you drive your car and making recommendations. So as a concluding note, I think there's a lot still to be changed over the next period of 5 years. And there's various well, impacts that we can see from fintechs, from big techs, but also from other industries. And please all think a little bit further than where the customer is starting from your perspective of your company, because I think there's much to be said about that. I would like to at least close the panel for today, so I would like to thank you all, so Hatim, Birte and Leon. Thank you very much.